Good morning. Welcome to the meeting of the ESPO Finance and Audit Subcommittee. As Peterborough is the authority holding the position of Vice Chair for the Management Committee for this current municipal year, they're now due to hold chairmanship for the Finance Audit and Subcommittee for the municipal year ending June 2024. Members are recommended to appoint Councillor Andy Coles as chairman. Please can I have someone nominate Councillor Coles? Councillor Rawlings, and then a seconder, Councillor Wright. Over to you then, Councillor Coles.
Thank you very much, everybody, and welcome to today's meeting of the ESPO Finance and Audit Subcommittee. This meeting is being broadcast live on YouTube, and it will also be available for viewing after the meeting. Can I please ask that all members and officers have their microphones on mute until they wish or are invited to speak? We've received apologies from Councillor Butlin, Councillor Jameson and Councillor Gregg. Councillor Peck is substituting for him today and is joining online. And Councillor Shaler also online. Thank you. I also welcome Richard Buckby from the TC Group, our external auditors, to the meeting. Can I turn to item 2, minutes of the meeting held on the 15th of February 2023, which is on pages 3 to 6 of your pack. I propose that the minutes of the meeting held on the 15th of February 2023 are taken as read and confirmed and signed. Do I have a seconder for that proposal? That's right, thank you very much indeed. Is everyone agreed? Any alterations or changes anyone spotted? I take silence as true, so I'm very happy to sign those minutes. Item 3, can I turn to declarations of interest in respect of items on the agenda? Does any member have any interest that they wish to declare? That's a no. Thank you very much indeed. There are no urgent items at item 4 of the agenda. So if we can move on to item 5, which is our first item on the agenda, it's the external audit of the 2022-23 financial statements, which you will find on pages 7 to 22 of your agenda. And David Goodacre, ESPO's Commercial Financial Controller, will introduce this item and will then hand over to Richard Buck.
Great, thank you, Chair. So as the committee will know, most local government authorities and private companies are required by law to have an external audit to give some assurances over their financial statements, where essentially the auditors are looking to make sure that they give a true and fair view, not containing material errors, and looking to also give some draw attention to any particular issues that may arise. And whilst ESPO is not required to do this, it supports our wider governance arrangements. It's part of our code of governance, and it's just a really good thing to do to give the committee assurances over our finances. And as we'll see on a later agenda item, it's one of a number of streams that we use to give the committee that assurance. Part of doing so is inviting our auditors to report directly into the committee on their findings from the 22-23 audit, and as you mentioned earlier, that's why Richard is here. I think one thing just to draw out this year in respect to the auditors, and our auditors were previously Fortis, and during the year Fortis merged with TC Group, and that's why the auditor is TC Group now, and we're just going through the final processes of novating our original contract over to ensure we're compliant with procurement regs. So I think on that note, I shall hand over to Richard to present his findings. So what I'd like to...
Thank you, Dave. Thank you, Chair, for inviting me to the committee meeting. So what I would like to do is run through my audit findings report. This will give you an overview of the audit work conducted and key points arising from the audit that we need to report back to yourselves. Points already discussed with management, but this committee being those charged with governance, we bring this out so you can see the full picture. So the first point I was going to cover is around some general overview. So as Dave mentioned, ESPO is not required to have a statutory audit. It's not underpinned by legislation, but in terms of good practice, good governance, you do choose to do this. So our audit work is conducted in accordance with international auditing standards, as if we were auditing a large company. During the audit, we had several meetings at the preliminary stage with management to understand if there had been any changes with the organisation. We document that, and we document the systems and procedures, and also conduct the audit on a risk-based approach. So in terms of the current status of the audit, our audit fieldwork and completion work is now finished. We are ready now to proceed, subject to finalisation of a couple of final areas. So we'll need a letter of representation to be signed. So this is a letter from yourselves to us, which explains that you've given us full and free access to the people we need to discuss the audit with, and all records have been made available to us. We'll also need to update on events after the balance sheet date. So we're auditing the accounts up to 31st March. We need to know what's been going on. So there's various procedures are already undertaken, but we need to just extend that to the point that we do actually sign the audit report. And before we can sign the audit report, the actual financial statements will need to be approved and signed by yourselves. We're at a fairly advanced draft stage as far as I understand, so we're pretty much there in that respect. Okay, so in terms of the audit opinion, notwithstanding finalising those points that we've just discussed, the audit opinion will be an unqualified audit opinion, which is essentially a clean audit report. So no issues to bring out in that respect. Now, I'll just mention, and we need to do this as part of our feedback to yourselves, we consider our independence and objectivity as auditors and our compliance with the international ethical standards. Please say there's no issues that are impacting our independence and objectivity. One area that we look at, and is quite key in this, is whether there's any non-audit services. So are we potentially providing other services to you that you pay us for, which may impact our thinking in that respect? We only provide an audit service. There are no other non-audit services we provide, so we don't see any threats to our independence in that respect. Now, in terms of, I mentioned at the start, the audit is driven by a risk assessment. So there are significant risks which are inherent on any audit, unless we can rebut that presumption. The two areas are revenue recognition. Has the right amount of income been reported? And we look at that from an error point of view, but also potentially a fraud point of view as well. Could the figures be potentially manipulated in some way? And also on the fraud theme, the management override of controls is another significant risk that we have to address. So those two areas, extensive testing that we conduct. So on the revenue recognition side, we've tested all income streams on a sample basis, and please say there were no concerns, no errors found. On the management override of controls, really we're looking there. One of our key areas of testing is looking at journaling. So this is manual entries into the books and records that could be made, and we look at areas of potential risk where there may be postings made at weekends, around some figures, direct entries into the bank, etc., etc. So we cast the net pretty wide in that area. And again, pleased to say no concerns. So they're the two presumed risks. Other risk areas, significant risk areas we've addressed are the stock. So ESPO holds a significant amount of stocks, circa £10 million at the end of March 23. So we're looking at the stock valuation. So again, we sampled that, significant coverage on the population. We came up with a trivial error, which was an extrapolated error. So it doesn't feature in our report because it's so low. So no concerns in terms of the stock valuation. And then the final two areas, we've got the recoverability of debtors, so the sales balances. We've tested after-date cash receipts, and we're comfortable with the amounts that we've seen there recovered. And the final areas is the property valuation, so significant figure on the organisation's balance sheet. You have a procedure of having an independent valuation undertaken every year, so we're happy with that. We look at the valuation basis, who's conducting the valuation and their experience, and we're comfortable that those figures have been adequately brought through into the accounts. Other areas we need to feed back and consider as part of the audit. Post-balance sheet events, so we've mentioned that earlier, we will need to cover that up to the point of signing. Going concern, so we have to consider your assessment of the organisation's ability to continue as a going concern. And what do we mean by that? It's the ability to continue for at least 12 months from the point of approving the financial statements. In my audit report, I comment on your assessment there, whether I agree. I do agree I do believe you are going concern based on the strength of the balance sheet and the projections and the work that we've done. So no concerns there. And another area that we consider is related party disclosures. Okay, so we've got transactions between ESPO and the member councils that are disclosed. So we've tested all of those transaction disclosures, and they're all adequately brought into the accounts. Moving forward, an additional output from the audit process is looking at any potential weaknesses in the system of internal control. Pleased to say that there's only one item that we've brought to the table from our testing, which is more of a housekeeping issue. So a test that we perform in conjunction with an organisation is looking at a reconciliation of the turnover, the income versus the VAT returns. In theory, they should be the same, but sometimes there can be deviation. And as a matter of good housekeeping, rather than just doing this at the end of the year when the audit's happening, we recommend that this is done on a quarterly basis in accordance with the VAT submissions. So you've got a chance to nip in the bud or spot any potential deviations in those figures, whether that's the statistical reporting on the VAT return or the figures in your accounts. So please say that was the only point arising from the audit. So very good effort on that front. In terms of the statements, so we consider whether, as we work through the audit, if we spot any errors or misstatements, we have to aggregate these. And also we consider whether there's any recommended adjustments. So we spot something that's material and we feel that needs to be adjusted. We discussed that with management. Pleased to say, again, there were no audit adjustments required. So there was nothing that we found that was material and needed to be changed in the financial statements. In terms of unadjusted misstatements, so we consider whether there are any immaterial items below a threshold that we've set at the planning stage, which again we would effectively bring onto our score sheet, and we sort of rack these up as we go through the audit, but would not be recommending adjustment. There were no unadjusted misstatements. In my report that I've shared, there's some items which are immaterial, which are effectively balance sheet classification, which were tidied up as part of the process. So again, sort of negative debtors, negative creditors, which have been reanalysed to the correct account code. But as I say, immaterial figures that were just a tidying up exercise, really, as part of preparing the financial statements. Okay, so that concludes the feedback from the statutory audit. I'd like to just take the opportunity to thank the team, ably supported by Gary, Dave and Laura as well, who's not here. So thank you for helping with a smooth audit and providing the information we needed in a timely manner. Thank you. So happy to take any questions.
Thank you very much indeed. Councillor Rawlins, would you like to start? Thank you.
Yes, thank you for the presentation. It's very clear and concise. On the VAT reconciliations, obviously there'll be. I'm just asking if there's any automatic check through the software that would highlight, because on some VAT software it will highlight if it's not, if the program doesn't think it's quite right. The other thing is, do you know? I mean, would you have a tabulated view of? Because obviously you're making zero rated supplies as well as standard rated ones, and will you have any partial exemption in there, or it's just zero or standard rated?
I believe it's just zero and standard rated. I'm looking at Gary here. I don't believe there's any partial exemption from memory.
But you'd have some, if it was reviewed on a quarterly basis, you'd have some general comparisons from
previous quarters.
Yeah,
so picking up the first point around whether the software has got capability, I'm not entirely sure whether it does or not, but my starting point from this would be essentially the output the software gives for the figures that it pulls through into the VAT return, and then comparing that against the income codes and adding those together and look at the process, but looking to see where the differences may arise, if any.
Yeah, perhaps I could just come in at this point. So the recommendation's a really good one. You know, we've got a variety of checks and review steps when compiling the VAT return anyway, and this is an additional one to sort of throw into the arsenal just to give us all comfort that nothing crops up that we're not expecting. So we'll adopt that and start doing that. There's nothing within our software that sort of does that automatically, and we'll switch from sort of doing it manually on an annual basis to popping it into quarterly. Don't foresee any particular challenges with doing so. Sorry, Councillor Wallace.
Yes, Dave, when you're posting, the staff are posting invoices, etc. Are they automatically coded with the right back code, or can they overwrite that? They can't overwrite. So really, it should be somewhat foolproof.
In theory, yeah.
There's always going to be an odd thing that.
Yeah, exactly. It's a relatively straightforward business. We've been inspected by a number of times by HMRC over the years, and I've resolved any sort of queries or questions satisfactorily over the years as they've cropped up.
When they come, they just tend to check your turnover.
HMRC have come for a variety of different things over the years. It's some parts of the business are really simple, some of it's a bit more unusual around sort of rebates and energy, but we've been reviewed on a number of occasions without issue being raised.
Thank you. Just to follow on from Dave's point, really, just following the year-end process and the audit, we do perform an internal retrospective to look at how efficient and effective the audit process has been from our perspective and our year-end processes. And as part of that, that continuous improvement, we have already actioned this particular VAT reconciliation action, and as well as looking at other opportunities to try and streamline the audit through for next year as well. So building on the work we've done to date.
Thank you. Councillor Wright, did you want to come back?
No, it's just a general comment from me, really. I mean, pleasing, to see the audit with no significant issues, etc. And you went into quite a bit of detail saying how you'd checked journal entries and gone over the weekends and just a general question: how many hours does the audit encompass? How many hours do you put in to complete this audit?
From our side, that's a good question, because I actually looked at that this morning. It was around about 385 hours across the team that we put in.
Okay.
Team members.
Thank you.
Do you want to come back, Councillor Rollins?
Just on one further point regarding the stock valuation, I'm probably looking at David here as well. Are there any instances when you go to net realisable value rather than cost for the valuation? And if so, is that a sort of manual override of the system then, Dave, or is that something that you can do more automatically?
So the stock system values everything at item level at a weighted average cost, and that's all systemised and detailed at item level. What we do to consider the realisable value of stock is have a stock provision, which we calculate separately at item level as it happens. And we apply a few rules that look at stock turn, how fast that item's been selling over the last few years, what we might reasonably expect. And whether there's any risk. So, for instance, if we've got a volume of stock on the shelf in the warehouse that might take, say, 3 or 4 years maybe to sell through, perhaps because we bought it internationally and had to buy a large volume, for instance, we might look at that and assume a level of discounting, perhaps, that might be needed to clear it over the long term. And we apply a model that looks at basically the longer we think it might take to sell, the higher the sort of discount that's allowed for, and off the back of that, we look at the realisable value. The provision at the end of March, I think it was about 600,000, which was actually lower than the year before, and part of that reflected what we saw at the time, which was inflation coming through, where we bought stock previously at a lower price and obviously it was going up. That gives you more confidence that you're not going to need to discount it, or you're going to go below that realisable value. What we're going to see this year and coming through the start of next year is that just start to flip around the other way, whereas some of the prices start to come back down and we pass that on to our customers. we start to see that balance change a little bit. And so we will probably be increasing our stock provision a little bit this year. Nothing that's out of the ordinary. It's all just part of the normal course of business and reflected in our margin that we're bringing to you, every quarter, and all sort of rooted in trying to make sure we're still delivering a really competitive offer and delivering value to schools.
I'm not seeing any questions online. Does anyone wish to comment from online? No, I don't see that. I have one of my own questions, which is the one I ask of my own team in the council, which is how many times did you have to come back to check and to query? It's always a good measure about how well the organisation is working, that the information you get firsthand is clear and concise and you don't have to challenge it. So I was just wondering if you could give some sort of metric about how often you had to challenge the information that you received.
That's a very good question. I'm trying to sort of pick up in terms of the fieldwork. So we as you probably understand, we set out a large list of items that we need at the start of the audit. I mean, it may be one from the other side to understand how many times we've been knocking on the door and asking for more information. I think the information provided at the start was generally comprehensive. There were areas, because it's not just dealing with the finance team, we're having to sort of work with the sales teams, etc. So actually digging into working with those teams to get more detailed explanations and understanding of transactions and to fulfill the documentation we need for the samples we've requested. That was the main area of going back. I haven't got a metric in terms of the number of times we've gone back, but in terms of the audit process, and we kicked off with the planning around about sort of May time. I think the boots were on the ground around sort of late May, early June. Conducted a good proportion of the field work at that point, but we did revisit in July and in August. There was follow-up work that we were conducting to tie off those loose ends, to go back and speak to the sort of more team members where we could get more detailed explanation. So I can't give you a sort of a metric as such, but to give you a flavour of the process. So yes, we were going back and we needed to go back to sort of push further, but we did have a good level of detail in the first instance from the team.
Dave, I suppose back to you for any comment.
Yeah, sure. Some of that's entirely planned. So you kind of think that the audit phase, do the planning work, get the boots on the ground, choose some samples, and there's a lot of samples. And the team then don't provide everything and all the documents in that sort of first sort of week or fortnight, because some of the samples are into sort of high, nearly 100 items for certain sample checks, and there's many samples to check. So actually the team go away and through sort of late June and early July go and pull all the documents, and the evidence for those samples, and then come back and deliver. So that is kind of well planned and well expected from our side. That's sort of the schedule. And actually what we found is it's the second year working with Richard and Richard's team, and we've been sort of mutually understanding what everybody wants and what information that we need to provide and the way that they want to see it, as we've both sort of learned how each other are working, because it's quite a different audit approach from Grant Thornton and PwC, who used to provide the audit.
But you can give us reassurance that the system works well and that the officers aren't overwhelmed by difficult questions, or that the paperwork in the first place probably isn't as comprehensive as you would like.
I'm satisfied with the information that the team have been providing and that the auditors have been requesting, and that it's been provided on a timely basis.
Yeah, I'd agree wholeheartedly, really. I think, I guess audit processes have changed over the years. It used to be on site often for 6 to 8 weeks often. These days, often only on site for kind of the first 1 to 2 weeks, and then kind of communicating kind of indirectly after that and following up on certain bits and pieces. I think as with any audit and process, there's always room for continuous improvement. One of the things we are looking for next year is to try and get that sample testing, understand the samples much earlier, and try and provide those samples much earlier back to the audit team. And that's in the plan for next year as well. So definitely always looking to kind of improve those processes and try and expedite the efficiency and effectiveness of the audit. Yeah.
It's lovely to see such a nice, clean audit with such clear direction. Sometimes you think, is that right? Should I be challenging this? Because there's nothing there to challenge. But I'm very reassured of what you said, that the whole process works really well. So thank you. Any more questions, anyone, or shall we move on? Okay, so I'm asked to move that we approve the external audit of the financial statements for 22-23. Do I have a seconder, please? Councillor Wright, thank you, and Councillor Rollins. Are we all in agreement? No dissent from online? Agreed. Thank you very much, Councillor Beck. We're agreed. Thank you very much indeed. Can we move then on to agenda item 6, which is the Internal Audit Service Annual Report for 22-23, and you'll find that on pages 23 to 56 of the report. Neil Jones, who is with us online, Head of Internal Audit and Assurance at Leicestershire County Council, will introduce this report. Over to you, Neil. Thank you.
Thank you, Chair. Good morning, everyone, and apologies for not being able to be in the meeting itself. So, as mentioned, this is agenda item 6, starting on page 23 of your pack, and it's the Internal Audit Service Annual Report for 2022-23. So, the paper explains that I'm required under the Public Sector Internal Audit Standards to present an annual report to the board, and for ESPO, the board is the Finance and Audit Subcommittee. The subcommittee's revised terms of reference now allow for it to formally approve the annual report rather than it have to be approved by management committee. So there are specific requirements to incorporate into my annual report, and the most important of those, from my perspective, is my opinion on the overall adequacy and effectiveness of ESPO's control environment, and that is its frameworks of governance and systems of governance, risk management, and internal control. So in terms of how I reached my opinion this year, may I ask members to turn to Annex 1, which is page 31 of your pack. And starting there, I explain how I use a combination of evidence to reach the opinion, including the findings of audits, which are summarised in Annex 2. And then I also evaluate the control environment through observations, for instance, the associated governance through committees, policies and procedures. Excuse me. So, whereas individual audit engagement provide targeted micro assurance, the overall opinion is different. It's a macro assurance over a defined period, which is the financial year. So I bring together assurance threads using various themes, trends and evidence and professional judgment to provide a sort of holistic strategic insight into the organisation. A couple of years back, I found some guidance from the Institute of Internal Auditors, which provides a definition which I think fits ESPO's position, and that is substantial assurance, and the basis behind that is a sound framework of control operating effectively to mitigate key risks, which is contributing to the achievement of business objective. This has been backed up by this year there were no audits classed as partial assurance, and a high importance recommendation for the previous year was closed off. There have been occasional medium risk rated weaknesses identified in individual audit engagements, and also, as always, we've discovered with ESPO that we have confidence in management's attitude to resolving those identified issues. So the opinion listed at the bottom of page 23 is in bold and repeated in the actual annual report itself. If I might ask members now to move back to page 27, which is the headed the appendix, that's the actual annual report. And after some background, I repeat the opinion, and then starting paragraph 8 through 14 is where I just provide a summary context on the information, and explaining that for all for assurance audits, 8 audits returned substantial assurance ratings, and we also delivered 6 consulting advisory type audits. One audit was deferred into 2023-24, and another audit was merged into the wider audit of IT controls. So paragraph 15, 16 outline how the service performed, and then paragraph 17 to 19 reflect the internal workings of the service. So self-assessments have led me to confirm that my service generally conforms to standards, but there are some actions to further improve quality, and they need to be picked up. Finally, at paragraph 20, a reminder that the head of Internal Audit Service Annual Report does help to inform the annual governance statement. So the headlines for the 22-23 year was overall, there's been a positive opinion given across the 3 components of the control environment. The overall substantial assurance rating is given, that the control environment remains adequate and effective, and the majority of the planned work was achieved. Once this report is approved, I will share with your heads of audit at your respective authorities. So I'm willing to take any questions on that, and I've also got Matt in the room to provide any more detail should be required. Thank you.
Thank you very much, Neil, and good to see you here, Matt. Members, any questions? I think everyone is content with the report. There's nothing coming here or online, so congratulations.
Thank you.
Extremely well done.
I
I was going to ask you the question around cyber, because of course that's one which has been so challenging over the year, and whether you see in future that that's going to be buttoned down a bit more strongly.
Matt, did you want to take that in terms of the recommendation that was closed off last year as well?
Yeah, sure, Neil, thanks. Yeah, great question, thank you. In terms of, first of all, the high importance recommendation, we will come to it in my progress against plan report, but there were some weaknesses that we spotted as part of cybersecurity audit. We did a follow-up piece of work, so that was in 21-22. We did a follow-up piece of work last year, and all but one have been corrected, and now this area, which we'll go into the detail when I present my report, was also corrected as well, which is really good news. We're not resting on our laurels, we'll do some more cyber work, but we'll probably, at the minute, we'll be waiting until the next financial year, unless something comes up very specific out of penetration testing, because we've done a follow-up piece. If something comes out of the penetration testing work that we'll do as part of key controls work, then obviously we'd look at it straight away.
Brilliant, thank you very much for that update. If there are no other questions, then I think we can move on that we approve the Internal Audit Service Annual Report for 22-23. Members, are we in agreement? Who would like to second? Councillor Wright, thank you very much indeed.
Thank you.
Thank you very much, Neil, and well done. Can we move on to item 7, which is the Internal Audit Service progress against the 2023-24 Internal Audit Plan? And Matt, the Audit Manager at Leicestershire County Council, will present his progress update, which you'll find on pages 57 to 66 of the pack. Matt, over to you.
Thank you, Chair. Again, I'm not planning on dwelling too much on the detail in the plan, given it's a mid-year stage, and currently there were no issues to bring to the committee's attention, which is good news in itself. Going through the plan then, going through the report on page 23 of the pack and paragraph 4, we just talk about that it is progresses against the 23-24 plan, and as a reminder, obviously that was the plan that was discussed at this committee at 15th of Feb and then taken, approved by Management Committee in the 22nd of March. Paragraphs 5 and 6 then detail the types of assurance that we provide, which are full. There's 4 of them there, as you can see: full, substantial, partial, and little assurance. Partial and little assurance, obviously, typically the ones that are most important to concentrate on, because they result in high importance recommendations that we follow up and retest. And then we keep this committee updated that the risks have been addressed, which brings us nicely onto the high importance recommendations detailed in 9 and 10. The cybersecurity work, as I've mentioned, we originally completed an audit in 21-22, and there was quite a few recommendations from that. We did a follow-up piece in 22-23, and we just got one high importance recommendation remaining, and that was in respect of an ordering process within an actual system. This ordering process has been replaced with a more secure product that doesn't have the vulnerabilities of the previous one. And so, subject to the approval of this committee, we're satisfied that the high importance recommendation has been adequately addressed. When we're talking about high importance recommendations, equally as important though is paragraph 10, which explains that our 23-24 coverage to date has not resulted in any more high importance recommendations to bring to the attention of the committee. So that is good news as well. Moving on to paragraph 11, we talk about the progress against the 23-24 plan. And obviously that brings the committee up to date on progress since the last report, which was back in January 23. Now, as you'd expect at that time, we've got some work in progress still on 23-24 22-23 year, because it hadn't been closed by then. We've got 7 audits to complete at January, and I'm pleased to say, obviously, as you'd expect, they're all completed with substantial assurance. So all prior year work was completed. We've now completed a further 4 pieces of work in 23-24. And we've got 13 areas at various stages of work in progress, 9 of which only need to be at that stage for a variety of reasons. And a classic example we've just spoken about today, actually, and that was we would look at any recommended improvements through the external audit report, and we would go in and test those. So when we talk about recommended improvements to do with VAT, we'd actually go in and look at that. So that's one of the reasons why we delay purposely. Obviously, the appendix on pages 61 to 65 provide the detail on the audit should they be needed. But as I've said, there's no high importance recommendations within there. So really, in concluding, the key and healthy headlines for this committee are, in respect of the high importance recommendations, we've addressed the one in respect of cybersecurity. There are no new high importance recommendations out of 23-24. And in respect of the progress against plan coverage, as you'd expect, we've completed 22-23 work. We're making very good progress on 23-24 plan. And funnily enough, I'd already put this in before you raised it, Chair, with the external audit. I've put here, and more importantly, we continue to have a good professional yet independent working relationship with ESPO management and the employees in order to be able to complete our work in a timely manner, because that is a really good point you made, that obviously, you know, the two-way interaction working well to be able to get the throughput. So I'm happy to take any questions, obviously. Thank you, Chair.
Thank you very much indeed. Members, any questions at all? Councillor Rollins, thank you.
Thank you. Just looking at the testing that you're currently undertaking, Matt, you've got the, I mean, it's a bit of a topic on the media at the moment, but the hybrid working arrangement.
Yeah.
Are the expectations of the management fully embedded with the staff on that one? So that is just that people do understand their contractual obligations and what's expected of them.
I would say yes, but we've not completed the testing on that. So yes, from everything we've found up to now, but in terms of what is required, and equally so what is required from the management side as well, to, you know, not only just throughput of work and annual performance reviews, etc., but it's also mental health. So it's the checking in and the one-to-ones, etc. So far there's no issues, but I'm going to regret saying that because we've not concluded the work. But the headlines at the minute are at that stage. But thank you.
Yeah, because obviously it's a difficult topic because, yeah, people, I mean, like I said, there's 2 angles to it, isn't there? There's making sure that people fulfill their job criteria and work in a responsible and timely manner. But there's always, you know, working on your own. You know, I speak from someone who's been self-employed for many years. You know, it can be quite tough when you've got a lot of pressure on you and you haven't got some of your colleagues to bounce ideas off. It's not all as rosy as it might appear.
David, do you want to come back?
Yeah, no, I guess that's probably is one for me. So yeah, we've adopted hybrid working, as you say. I'm looking forward to the audit to kind of reassure us. But I think we've got some building blocks there in terms of you can look at performance, you can look at internal external audit performance, and we're having to do so much more, as you say, on the mental health side of things. And that's something we take incredibly seriously at ESPO. We're guided by policy that exists at Leicestershire County Council, so we're subject to the same sort of hybrid flexible working policy. But we've adapted our building with lockers, there's breakout desks. It's a really nice environment. So I would say so far so good, but definitely something to keep an eye on.
Councillor Peck, I see a hand up online. Would you like to ask a question?
Yes, if I could. Sorry, I just got a bit of a cough. Yeah, on the cybersecurity issue, have we used any external experts in trying to test the system, test our IT systems to make sure they can't be tampered with? Do we use outside experts, or do we just do an internal check on that?
If I just reply with an overview on that, then by all means David will come in with the detail. But yes, there's penetration testing that's done by external consultants, which is very robust, and then we look at the findings from that. Typically it's high, medium and low recommendations, and we make sure that high importance recommendations are done as soon as possible, as you'd expect, and then the mediums, that there's been an assessment on them as to when they should be done. It's signed off at an appropriate level, and importantly explained at lay terms as well, because obviously some of them are quite technical and complex. And then the lower importance recommendations, we just make sure that they've actually gone through a thought process with them that's been signed off as well. So I'll hand over to David for the detail though.
Well, what I would suggest is one of the items on the closed session later on the agenda item is an overview of our risk landscape. And actually that would be a really good forum to have a slightly more detailed conversation of that, given that it relates to cyber. What I would say though in public session is exactly as Matt says, we have a number of external parties that provide IT support to us, which includes professional penetration testing, support. We have external training experts that deliver online training and testing of staff. And a variety of other sort of control methods which have been assessed internally and externally to give us some assurance over the quality of our cyber arrangements. But sort of beyond that, I think it would probably be more appropriate to talk about in the risk item later on, if you want further detail.
I'll just say that's very reassuring, because this outside penetration experts, I've had something to do with them, and it is very, very thorough. And it's something I think every organisation needs these days, to be honest, with all the cyber attacks that are going. So thank you for that. Appreciate it.
Thank you, Councillor Peck. Any other questions? Councillor Rollins.
Just looking at the final item on the appendix of the risk management for the warehouse expansion, which is the health and safety assessments and business continuity, etc. Do we provide that internally, or is that something that you look at? You get an internal review, external review of that. I'm thinking about sort of general site maintenance and safety, those sort of things that can go wrong when doing projects are in place.
Yeah, thank you. It's probably good just to talk about the whole control environment, because first of all, I sit as the title is a critical friend, but I sit on the project board for that as well, to make sure risks and issues are appropriately managed. But then at a more operational level, I've got a colleague that actually goes in and looks. She's got background from Royal Mail, so she's quite hot on the logistics sort of area and health and safety associated with that. She's done audits on it. But then in conjunction with that, we work very closely with ESPO's health and safety manager, who was formerly from Leicestershire County Council as well. And obviously ESPO then take health and safety advice from as part of the buy-in arrangements. They're from Leicestershire County Council as well directly. So we've actually, bringing straight up to date, we've just looked at, we've now finished, it doesn't say it on the report because when we went to type, but we've finished the pre-work, if you like, before they actually put spade in the ground, and found no issues. It was substantial assurance. Now it's moving on to obviously the build. So I don't know if Christian's got anything to add.
Yes, thanks. That's really comprehensive. And in addition to all of that, obviously our professional contractor bring a wealth of expertise and own health and safety team as well. So we take the support wherever we can get it. But absolutely prime for me in the next year is obviously health and safety at the site.
Thanks very much. I have one question, and that's on planned audit J, risk management emerging risks. And just I'd be interested to know. Obviously, you know when certain legislation is coming in, so you can plan for that sort of thing, but sometimes the risk is an emergency one, and just how that system works and how you're going to analyse its effectiveness.
Yeah, thank you. Without going into the detail of each of those, it's very much a two-way thing that we have regular meetups. I met with Christian a few weeks ago to go through the audit plan and progress, and he pointed out a few areas that were coming in. Also, we get pointers from industry standards from the Institute of Internal Auditors, etc., on areas we should be looking at. Conversations with David as well, similarly, and other officers within ESPO. But but also, it's just that ongoing dialogue that we've got an awareness, going through the risk registers as well and seeing material changes to it, and then most importantly bring it to this committee's attention as well, that we seek to move. Actually, we don't think that's an essential piece to do now. We'd like to move this forward like we did last year with you'll probably remember the procurement regs. The new regs weren't out, so we actually brought forward some of the warehouse work and looked at it at an operational level. So I'd say it's quite well joined up, but I don't know whether David or Christian want to add anything to that.
Well, you've really conveniently just asked sort of the question or the point I was going to draw out, actually. So part of putting risk into the domain of this meeting more formally, when we changed the terms of reference, was to exactly give us that type of scrutiny, both upwards and to gain the advice from the committee as well. And that's what's on the agenda later on. And if you look at the internal audit plan, it's been very much just sort of communicated upwards to progress. But actually, as we kind of stand now mid-year, one of the opportunities for the committee is to considering those risks, perhaps say, do we need to put anything else in? Do we need to change the plan? And actually, having had those conversations internally, actually, we're quite satisfied that it still reflects the right work to reflect the right risks that we're facing. But clearly, if something else comes up, or taking the benefit of any councillors' expertise elsewhere, it's clearly something we've got the opportunity to bake in. Sort of looking across ESPO, for the future, the most significant thing we have ongoing at the minute is the warehouse build, and that's why that was put in as a new piece of work this year for internal audit. Not just reflecting that the contractors will manage health and safety risk primarily on site, almost within the fence. We're recognising that it's a really big new activity for us, for the staff who will be wandering past it. The warehouse will be in and around it, and as eventually the walls come down. So that was the additional piece of work that we drew in this year to make sure that we really picked up and thought through not just the impact of the contractor, but the impact of the staff being on and around, what would be a live site, for instance. But the risk review later will give you an overview of where we see some of those key risks, and some of how we're sort of mitigating or approaching some of those.
Smashing, thank you very much. I don't see any more hands up or any other questions. And I therefore move that we approve the progress update received, and to note the addressing of the final high importance recommendations in respect of the cybersecurity matter, and that there are no other high importance recommendations within the committee's domain. May I have a seconder for that? Councillor Rollins, thank you very much indeed. Members, are we all agreed? No dissent, so we are agreed. Thank you very much indeed. Can we now move on to item 8 of the report, which is the financial statements and annual governance statement 22-23, which you'll find on pages 67 to 114. David Goodacre, ESPO's Commercial Financial Controller, will present this report, which you will find on pages 67 to 114. David, over to you.
Thank you. So we've had the results of the external audit. We've had some assurances around internal audit as well. And this is all sort of designed to give an overview of governance and the quality of the governance arrangements within ESPO. So this paper is sort of really designed around two things. One is around the AGS, so our annual governance statement, which brings together those two pieces of work, but also combines in an element of assurance from officers within ESPO to give the committee that broader view or comfort over the governance arrangements. And the idea being then is that actually having got that comfort over the general governance arrangements and specifically over the finances, you've then got you're appropriately informed around a decision to approve the financial statements. So in terms of the financial statements, I think to start with the trading surplus that we previously reported to management committee, so management accounts, back earlier in the year, was a surplus of 5.9 million. So it's 0.3 million higher than budget and 0.4 million higher than the previous year. So it was a really, really good performance year for ESPO, both delivering really great value for customers, but also still continuing to grow the business and serve a broader area. The financial statements show a net profit for the year of 3.7 million. So it's slightly different. And to draw out that difference, the key reason is actually our pension costs. And there's a few other statutory adjustments as well, but by far the largest is pensions. And we only account for the defined benefit scheme calculations at the end of the year once the actuaries have done all their reporting. It's not a cash cost, and actually these changes don't affect the dividend that's ultimately proposed and paid to members, but it's an important part of our financial compliance to make sure that we are reporting strictly the fully correct numbers to the committee and to stakeholders. In terms of turnover, I think one of the other points to draw out is it was a record year, not just for the surplus, but for turnover as well. So the business really is continuing to grow, and we went over a turnover of £100 million for the first time. So 106 million, and almost a 20% increase on the previous year. So it was in some respects really successful from growing the business, but it does also reflect some of the volatility in the energy market as well, where again we're taking a relatively fixed margin, and customers are managing that risk on behalf of customers. But there's still growth within the core catalogue business and the core rebate business, exactly as we've sort of discussed with the committee throughout the year. The financial position on our balance sheet remains really healthy. We had net assets of just over 20 million at the end of March, and that a large part of that supports the payment of the dividend to members, but also supports the building of our reserves to both invest in the warehouse, support the growth of the business in the future, and support our working capital needs, recognising we actually have a big seasonal peak in the summer as well. There's a few areas of judgment to just draw out, and Richard touched on some of this earlier. So the first is the value of the pension scheme, and this has shifted from being in a deficit in the previous year to about even, so £3,000 asset at the end of the year. And what we've seen on our pension scheme is that we're now at a place where it's 100% funded, so there's no sort of deficit there. But we're continuing to make the contributions within the scheme to take it to a surplus with the broader scheme strategy to try and reach 120% funding, to give it that protection against any volatility that might occur in the future. And this is not just ESPO, like an individual strategy. This is a much broader strategy across the whole scheme, with all the constituent members trying to reach that over a sensible period of time. So we're following the sort of core approach set by the actuaries and Leicestershire County Council as part of the custodians of the scheme. And this is all reflected in our MTFs as well. Future. The second area of judgment is the value of land and buildings. So we have those revalued every year, and they're just coming in at just over £18 million. And that's just valued in an independent way by professional advisors. And as Richard mentioned earlier, the final core assumption is around going concern. So is the business going to trade successfully for the next 12 months? Because that affects the whole presentation of the accounts. If we weren't, it would be very, very different. The committee will be well aware that our trading has been really, really strong so far this year. And earlier in this late spring, we signed off our MTFS, which gave some assurance over our future trajectory. One of the other areas then that we're asking for approval for the committee to recommend to the management committee is around the dividend. So back in 2015, the management committee agreed a methodology for calculating the dividend, which allows for 20% of the surplus to be retained within ESPO and then 80% to be paid out for members, with that being split across members depending on their usage of ESPO. In addition to this, ESPO would like to retain an additional £400,000 to build its reserves, recognising the planned development of the site, but also to allow it to ensure it has the sufficient funding to support its working capital, recognising factors like inflation. So the dividend that we're proposing is stated in paragraph 13, so it's just under 4.4 million. And then the final section is around the annual governance statement. So this is this final strand where we're giving assurances from officers over our governance arrangements. And I think the key bit to draw out is on paragraph 15, so page 69 of the report, where there's a group of senior officers who are part of this process, which includes our consortium secretary, consortium treasurer, head of internal audit, Neil, myself and Christian as director of ESPO, and the ESPO's leadership team. actually, there's no significant governance concerns that have been raised as part of that process. So I think at that point, I'd like to open out to any questions that anybody might have.
Thank you very much, David. Members, Councillor Wright.
Thank you. You've just touched on it actually at the bottom of page 68 and the retention of the 400,000. It's just a question really, do you feel that that is enough to retain in light of inflation going forward for maintenance and property maintenance and reserves, what you want to do? So just basic question.
Yeah, it's a really, really good question. And it's something we give a lot of thought to. So clearly we're trying to balance retaining sufficient funds to support the business, because we don't want to have to come back to member councils or authorities and ask for money at any point in the future. But equally, we want to continue to pay a dividend because we know how valuable it is to your authorities. And as the business grows, we want to continue to grow that dividend. So we're trying to make a balance. The 400,000 is similar to figures that we've requested in previous years. But what we might see is there's opportunity to increase it, particularly this year, as trading performance is going really, really well.
Yeah, thank you.
Councillor Rollins.
Just a quick one, David, regarding the pension fund valuations. Just first question, I presume that through Leicestershire, all the AGMs are either attended or for the people that are invested in, or some vote is given for all of them. The other thing is looking at the exposure of some of the pension schemes to the bond market and where the returns might not be as those expected, i.e. the coupon rate's gone up and the value of the investment's probably gone down. Are there, I mean, those are probably reviewed in their entirety, but are there some risks analysis done on that in terms of, because the stock market has been really buoyant and at some point it's just going to not be, because there'll be some profit taking and particularly world events at the moment, you know, it's looking, I mean, it almost looks a bit dangerous out there, but it's looking even more shaky than it has done for a bit. So it's just, we don't know, but what's our mitigation measures?
You're right. So it's a really interesting point, and actually, so this is one of the areas we really benefit from Leicestershire County Council's expertise. So actually, they've got a dedicated pension teams who are custodians of this scheme with their experts, who are regularly liaising with the investment managers, and actually that's subject to the full force of Leicestershire's governance. So there's a dedicated pensions board which is fully scrutinised by councillors within Leicestershire as well. So it's a real area we take a lot of comfort from being part of that, you know, the broader machine of LCC, as it were, and their significant expertise.
I take it Leicestershire is, which group are you now part of? Do you know? Because obviously Lincolnshire's gone in with the Auditor Coast, but where they merged a lot of pension management, but I don't know which one Leicestershire's with.
I would have to take that as a question.
No, just asking, because obviously the picture is completely different from when the local authorities used to manage it themselves. So yeah, and there are benefits, but there are downsides of that.
I shall have to take that away and get back to you on that one.
I could come in on that one if it's helpful. So we are partly pooled with LGPS Central, which is a sort of a pool of Midlands other LGPS funds as well. Not completely pooled. There is a percentage that's pooled with tech.
Assets that can't go in one go. Some assets have to be transferred over a number of years. I used to be on the pension committee at Lincolnshire, but I haven't been for some time, so lost track of it a bit. But thank you.
I'm on our pension committee, so that was the question I was really interested in. Was really how the process works for ESPO staff. I assume that they're all in the local government pension scheme, and so the 120% you're looking for is the overall entire scheme and not just ESPO, or is it specifically with ESPO?
That's the broader pension scheme strategy in terms of the level of funding. So depending on where the individual organisations in that scheme are, because they're all assessed and calculated individually, you know, that the level of contribution and the time frame that they're reaching that has been sort of agreed. So again, for us, it's all baked into our MTFS and our financial plan, and we'll contribute that strategy, and it's all the staff are is in that scheme on exactly the same terms as Leicestershire.
Thank you. And the one question I had, which I always get very confused about, amortisation of intangible assets. I just wondered if you could explain that particular item within the accounts.
Sure thing. So very similar to capital items, so the vans and the equipment in the warehouse. So our intangibles relate primarily to software and the investment in the website that we made a few years ago. And what we're doing is the amount goes onto the balance sheet, and because we're going to get value out of that investment over a number of years, we release that cost over a number of years to the P&L. And so that's what the amortization charge is. It's like an annual charge that writes off that investment in the website.
Yes, I'll come to you in a second. My question, I think it follows on. I thought it was software, but of course software has a 3 to 5 year life, and then it all changes anyway. So this is a constant churn where you're buying, you're then setting off the intangible assets by using the amortization process, and you've got to start all over again when you have a whole new set. So this is going to be a constant feature within the programme.
Yes, well, yes and no. So in the sense that the website was a real step change for us. It was a huge investment which really transformed our site and the offering for customers and the functionality within the business. So because that was such a step change and going to give a value over a long period of time, we recognise that as an asset. Now, actually, you will have seen through sort of previous committee meetings that the digital strategy is so important to us, and actually we're making day-to-day incremental improvements all the time to try and improve the experience for our customers. And actually for those, it's difficult to say that particular benefit is going to give us a value over sort of 3, 5, 6 years. So actually there's an element of that cost which is just being charged through on a day-to-day basis as just part of continual improvement. But where we have real defined elements that give a real step change in that functionality, we'll look to treat it as an asset on the balance sheet, spread it over time. But the more day-to-day, smaller scale investments, actually we just take to the P&L.
Thanks very much. Councillor Wright, did you want to come in there?
Yes, just following on from that really, so on the top of page 82 in the balance sheet, the tangible assets, there was quite a significant change from 22 to 23. And I just wondered why.
So, sorry, intangible assets, 22 to 23.
I can't find note 12, sorry.
That's okay. Oh yeah, so that is just the amortization or the depreciation of the website.
Ah, right, okay. Okay, thank you, Chair.
I don't see any further questions. So may I move that the committee approves the annual government statement and recommends to Management Committee the approval of the 22-23 financial statements and the proposed dividend pool of £4,369,269 to be paid in December 2023. Members, are we agreed? Do I have a seconder for that particular approval? Councillor Rawlins, thank you very much indeed. And are we all agreed? There's no dissent. Lovely. Thank you very much indeed. We'll pass that particular item. Can I now move on to item 9, which is the date of the next meeting, which is to be held on Valentine's Day. How marvellous. 14th of February 2024 at 10:30 a.m. at County Hall, Glenfield. My birthday happens to be 2 days before, so when I was a youngster, I always used to look forward to February the 14th, only to find it was my auntie who'd forgotten my birthday and sent a late birthday card. So the 14th of February has an alternate view, but marvellous. We'll be here for the 14th of February for the next meeting. That's tremendous. Are there any other items which the chairman has decided to take a session? Well, no, there aren't. There are no urgent items, so I'd like to move on to item 11, which is exclusion of the press and public. I move that in accordance with the Local Government Act of 1972, the public be excluded from the meeting for the remaining items of business on the grounds that they involve the likely disclosure of exempt information. Do I have a seconder for the motion? Councillor Wright, thank you very much, and Councillor Rawlins. Thank you very much. So I therefore move that we go to exclusion of press and public for the final items. Thank you.